Yo, yo, yo. Are they live? Here we go. It says he's live.
Stage as well. Ryan, how are you, man?
I'm good, bro. How's it going?
Good, mate. Good. I'm gonna finally meet you on Saturday, which
Yeah,
is
I'll
in.
be this Saturday.
Yeah.
We're going for lunch.
Man, I have to be honest. I
Wouldn't let me
actually,
join
this is the
from the
first
other
time I
Twitter. I don't
cheated.
know
I
why.
literally, your show, the one you did today, one of the best coverages of the whole Kevin and the Kevin versus Binance situation. So you kind of
Thank you, man.
inspired me to make this the highlight of
Thank you,
today's
man.
show.
I mean, it is. I guess it is the biggest news in crypto right now.
It
I
is.
think
It is.
Binance is. I think Binance is the biggest news in crypto right now, and
Oh yes.
for all the right and all the wrong reasons. I mean, I don't know if you listened, but CZ did a spaces yesterday, and I got at the end. I was invited to speak to him and co-host with him, and I asked him a few questions, but one of the questions I asked him is like, you guys have done everything too right for too long, and it's made you too strong. And he said, and I said to him, doesn't, how do you feel about that? Because you're in a decentralized industry, but we're getting into a centralized position of power again. And he said, look, that there is no second best. He said the problem is the next best exchange has less coins, less liquidity, less options, and ultimately
Yo,
Binance has
yo,
achieved
yo.
some kind of network effect, and he's 100% right. Like, unfortunately, the bigger you are in crypto, the
How we
bigger you're
doing?
going to get because you have more coins, more liquidity, more services, more customers, etc. Now, that translates very well into this what I called the bank walk. It was a bank run, but it didn't gain enough momentum, so we called it the bank walk. Um, and the thing about the Binance bank walk is that just in the major tokens, I think Bitcoin, ETH, USDC, BUSD, BNB, Binance have got like 61 or 60 billion dollars, and at the peak of the bank run, I think $5 billion had been withdrawn. That's like 8%. That's not a bank run. Like a bank run is 80% gets withdrawn. But you got to think about the momentum that you have to get for the bank run to actually happen to the extent that it may actually hurt Binance. because I mean, let's just say hypothetically that something is wrong at Binance, and that there is a hole at Binance, and let's say that the hole at Binance is as big, double the size of the hole at FTX. That would the hole is $16 billion. Let's just, under crazy assumptions, even $20 billion. Just in the top couple of coins, Binance have got currently on the exchange $60 billion. So it's a very different story from FTX, which had less than 8 billion on the exchange. You know, like you're talking about a different order of magnitude, and the momentum that would have to happen for us to find the issue in Binance, if we were to find it in the form of a bank run, it's just too big. So it's almost like they're too big to fail now.
Rand, would you say it's fair to I pinned this tweet I did yesterday, and it got like kind of some pushback from people, but you know, do you think it's fair for us to like use the phrase like bank run when it comes to Binance? Because you know, banks obviously run on a fractional reserve system, and I feel like this almost, I know like David Sachs from the All In podcast had a really good point on this. He was like, it's very important like the wording we use, because it almost like lets these exchanges off the hook, because it suggests that they're allowed to run on a fractional reserve system, when in reality they should be 1-to-1, right? And if they are 1-to-1, you could run the exchange, but theoretically it shouldn't cause any solvency issues if they're actually following the terms of service.
So about 95, I mean, no more, I think about 90, let me give you the actual stat. I think it's like 99% of Binance's stuff is supposed to be backed 1-to-1. And then there is a certain amount of Bitcoin that they actually do allow, where the users actually opt in to allow their Bitcoin to be loaned out on margin. And that was the missing $250 million in the, I don't know, 60 or 70 or 80 billion or whatever the Mazars audited. So I think you're right. It's not a bank run. It's a asset test, a liquidity test, more than anything else, unless Binance is leveraged. So,
well, it is a bank run, because you're testing whether they're an illegal bank.
Yeah,
so,
I mean,
so it's a test of if you're a pure custodian, then yeah, this is the test to figure out whether you are an illegal bank.
Yeah, well, as I say, Sam, I don't think it is the test, and the reason why I say I don't think it is the test is because to test FTX was easy. You just needed to draw like $4 or $5 billion to realize, or even $2 or $3 billion to realize that, hey, listen, they just didn't have any more money. They ran out of Bitcoin. We saw it on chain, right? But to test Binance, you would need to withdraw over $60 billion or over $50 billion to realize that they're not actually well capitalized.
What up? What up?
For the audience, just to make sure the audience is in the loop, and we're going to be talking about Binance and all the FUD around them later on. And we do have, I know that Kim.com tweeted about it, Ryan, you mentioned it in your video, about insiders reaching out. So we get a lot of people reaching out. We just need to verify. So if there's anyone that works at Binance, you can reach out. We'll keep your identity private. If you want to share things with us, we don't expect much. So I'm the optimistic here. But if there's anything that we should know, anything we don't know, you're welcome to come in. And we've been pretty good at keeping identities private. So just DM me on Twitter. But for anyone that doesn't know, anyone that's not too deep into crypto, Binance is by far the biggest exchange. I saw CNBC, and we're going to talk about it later, but I'll just give you an overview. I saw CNBC talk about, or Kevin O'Leary mentioned Binance and FTX in the same sentence as the two leaders in the space. Binance was significantly bigger than FTX, about 10x the size. So I wouldn't
Binance,
I wouldn't compare them in that way as Kevin did. And but however, they just if anything happens to Binance, I don't know what will happen to crypto. And that's where all the FUD is coming from now. It's kind of the aftershock of what happened with FTX, and a lot of questions being asked. And then it gets very interesting because Kevin O'Leary, who got $15 million, I don't think he got any of it back. We'll talk about it later, but he got $15 million from FTX or Alameda, I think it's FTX, got $15 million to be their spokesperson. And after the implosion, he continues to defend them. We're trying to get him on the show. I think Rand is trying to get him on the show as well on YouTube. He's still defending FTX. And he was at a Senate hearing yesterday, I think. Yeah, it was yesterday or 2 days ago. Or today, I can't remember. And he continues to not only defend FTX to an extent, but also take jabs at Binance, trying to bring Binance down. Now, again, I don't know whether he has motives behind it or maybe he's just being honest and that's like what he's telling us. I just, things he believes. And it goes, it gets a bit more complex than that. So it's a bit of a battle going on between Kevin and a few others in the traditional financial world and Binance that we'll be exploring a bit later. But I want to kick it off. I mean, I know you wanted to unmute, but I want to kick it off and get Ran, Alex, and we got Wolf of Wall Street here with us as well. Scott, get your thoughts, guys, and Umbrella and Fried Chicken. Shit, we got everyone. On the FOMC meeting. So maybe Alex, give us an overview on the FOMC decision yesterday and what your thoughts are. And I would love other panelists to kind of give us their thoughts before we kick off the FTX and Binance discussion.
Yeah, I know, Rand, you covered this morning, so I'd love to hand it to you. But Mario, do you want me to play those clips from Jerome Powell's presser real quick, just to brief the audience?
Yeah, definitely.
Okay, cool. So we're going to play a couple clips here real quick, just to tee off the discussion, and then we're going to hand it to Rand and some others on the stage to give their thoughts. So the first clip we wanted to play from the press conference yesterday was basically, Jerome Powell started by saying that they are dead set on getting the inflation rate back to 2%. So this is how he actually opened the talk.
Good afternoon. Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt.
So that was the first clip where effectively he said, they're remaining firm on the commitment. And then the second clip we wanted to play.
I think the interesting thing is, in the last probably 10 meetings, he's done that twice.
Where's Kevin?
Where before he talks about
Where's
the meeting,
Mr. Wonderful?
Something like, before I talk about the meeting, I want to just say the following. And I think what we're kind of seeing from him is a pattern. And the pattern is that in the more hawkish meetings, he starts off by acknowledging that inflation is the most important thing. Because he could have, like I said in my show today, he could have started off by saying something like, we understand that the increase in interest rates is starting to hurt mortgage holders and credit card holders and loan holders and stuff and debt holders. He didn't say that. He started off the meeting by saying, almost like anchoring us to say, look, whatever you're coming to listen to, what you're getting here is you're getting inflation. We're serious about inflation. We care about nothing else. It's almost like a negotiation tactic where you walk in and you anchor so that the other party basically is screwed. So whatever you were hoping to hear, he started off by setting the stage by saying, listen, tonight is about making sure that the American people don't suffer anymore because of inflation.
It's also the dichotomy of the debt-based monetary system where you either have inflation or recession. Deflation, recession, inflation, higher prices. So if you start with, we're committed to controlling inflation, you're saying get ready for the recession.
Yeah, I think those were really good points in terms of just how everything was briefed. And then he makes the second statement here that I'd love to get your guys' take on, where he basically said that, while directionally things are looking good after the last CPI print, more or less they need more evidence to confirm inflation will correct.
In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path.
Any thoughts on that?
Yeah, they're going to hold interest rates higher for longer. I think they're telling us that. And that is I don't know why anybody would think they're not going to do that. I'm sure, do government officials lie and be deceitful? But I think higher for longer seems to be the play. I think also one of the biggest things I took away from the meeting was one of the dot plots that showed they wanted to raise the terminal rate. where the terminal rate going into this meeting was set at 4.6%, and now at the end of this meeting, we're going to be sitting at 5.1. So they want to raise interest rates higher. They want more pain. He still thinks the job market is way too strong in America. He wants unemployment higher. And I think they're going to continue raising interest rates higher and longer and holding at some point.
Yeah, I think a few things that we have to put into perspective here, which I think let's break the Fed, the FOMC meeting into a few parts. The first part is the reduction in inflation, and you can't deny that the reduction in inflation is now decreasing at an increasing rate. So I think the drop between the 8.1 and 7.7 was 0.4 obviously, and then we went from 7.7 to 7.15, so we dropped by 0.6 or by 0.55, which means that we're at a point now where inflation is decreasing, but at an increasing rate, which is fantastic. So that's the first thing. The second thing is we've got to acknowledge the fact that we finally got a 0.5 interest rate cut. So that's one of the things that we have to celebrate. Like, we were getting 0.75s. It was rather unprecedented. And now we're back to getting 0.5%, which is another thing to celebrate. The third thing is that if you look at the dot plot, and for those who don't know what the dot plot is, it's where all the members of the FOMC plot by using a dot where they think rates are going to be at a certain point in time. And the majority of them think that, or the average think that the rate will be around 5.15, which means that in the entire 2023 market, a year, which is from now 13 months, in the next 13 months, they expect interest rates to go up by an additional 0.75%. Now, bear in mind, we've gone up by 0.75% for the last 3 rate increases in a row, or 4. I'm not sure if it's 3 or 4. But now we're saying from now for the next 12 months, if you take the expectations, the mean expectations, we're talking about an additional 0.75. So how I read that, and I'm not sure why the market didn't see what I saw there, is like, all right, well, great. We're now inflation is being reduced at an increasing rate, and the rate hikes are going to be dramatically slowed by a factor.
We're trying to get Kevin in here.
Of multiple X's. The rate
Apparently,
hikes
he declared war on Binance.
Slow. Although the Fed officials did say, look, we do expect inflation to linger with us until 2025, and we expect slow growth until 2025.
Binance.
So my question for you and Scott would be, what are your thoughts on the response to the markets? Because I would have expected, they bounced up and then pretty much corrected all the gains relatively quickly.
Hey guys, I can say, although I'm having kind of a bad connection here, that generally the first reaction on big news like FOMC, interest rates, etc., is wrong, and we see things go one direction very fast and then reverse in the opposite direction. That didn't necessarily happen here. To address something that Rand said, I think for sure that people to some degree understand what you're saying. It'll be a much slower cycle of rate hikes, 0.75 over the entire year. But it's important to remember that markets don't react to the actual news. What markets react to is what happens versus the expectation of what the news will be. So the fact that it got 0.5, which is what was priced in and what everybody expected, that was great. So you would have expected the markets to rise based on that news, but that's not what happened because the market was also pricing in, things topping out at 5 or there only being 1 or 2 more rate hikes total. Because remember, people were thinking we'd get those 0.75, about 4 in a row, which we did, then 0.5 in December, that was expected, 0.25 in January and February, and that would be it, basically. So not necessarily would we see a pivot, but the tightening cycle would basically end, as with the hawkish tone. So even the slightest bit of information that made it seem more hawkish, that this could go on for longer and could go slightly higher, was viewed as negative news versus the expectation. So whether it's good news or bad news actually is irrelevant. It's whether it's better or worse than what the market is expecting at that exact moment. It's nonsense. It makes absolutely no sense. That's why it's very hard to find any signal in the noise around these meetings, because you see that the market irrationally reacts and goes crazy, and then generally a couple days later, maybe it returns to the same place. It's kind of the reason it's so important to zoom out and look at the bigger picture and not attempt to trade or invest around these immediate meetings. But just because the expectation was slightly worse than exactly what happened, or what actually happened was slightly worse than expectation, that's why we saw markets drop.
I think the one thing we have to be very cognizant
tonight we
of,
got.
and by the way, how's it going?
You guys want to do the wheel instead?
One of my favorite people in the space, personally and professionally in the space.
Plan on doing the wheel tonight.
I think the one thing we have to pay attention to is, why is inflation coming down? So all the components of inflation are coming down, except the one that went up is goods. So is services, which went up, which means that wages in the US are still on the up, because services are provided by people who earn wages and salaries. And the second one that went down quite a bit was energy, and specifically referring to energy at the pumps, gasoline at the pumps. Now, the reason why the price of gasoline is coming down at the pumps is because Joe Biden has made a decision to deplete the U.S. strategic oil reserves. And the U.S. strategic oil reserves are now the lowest levels they've been in, I think it's about 40 years. So he's depleting, he's putting more fuel out of the market from the strategic reserves, which is bringing down inflation. But the truth is, at some point, they're going to have to stop. So either the war in Russia and Ukraine ends and petrol prices and oil prices start to normalize, or the U.S. runs out of strategic oil reserves,
Grey Goose, red wine,
gets
sausages.
to a level where they cannot release any more oil reserves, and then we get another little bump up in inflation. That's another thing that everybody's worried about. That's why everyone's talking about this double dip inflation cycle.
I think what you're saying is gonna happen. I really do. If we look back to the 70s, there were ebbs and flows, peaks and valleys in inflation.
Your mic, fried chicken, just your mic, if you can get it a bit closer, bro.
Yeah, my bad. There were ebbs and flows in inflation that we saw, where there were peaks and valleys. And I do firmly see that happening again, where we can drop in inflation, sure. And I think, if we look at what the Federal Reserve was saying a year ago, right now they figured the Fed fund rate would be at 1%. I mean, we're 4 times higher. So to me, if they're saying we're going to raise, that they only have 2 more 25 basis point hikes, I think there's going to be more hikes. I see this being more persistent and annoying for them than most people truly believe.
Nice champ with the alpha.
I'd also like to challenge the concept of what we're celebrating and what good news is. So, rates increasing at a decreasing rate. Or, sorry, what did you say? Ran, what was it you said?
Rates decreasing at an increasing rate.
Okay, decreasing at an increasing rate. So, what are we actually celebrating? Are we trying to get back to bubble economics where rates are low and we artificially pump real estate markets beyond the affordability of most Americans or most people in the world? And if good news is returned to that, what I would suggest that the market needs is the thing that people don't want to celebrate, which is a massive correction in real estate to affordability, and a market interest rate that actually reflects people being able to invest in these markets and people to actually be able to use real estate for what it was originally designed for, not as a savings account, but as something to live in. And so the celebration is to try and get back to Ponzi economics. And if we're just saying, let's try and put everything back to where it was, that's unsustainable.
Red on red,
and
gold on
we need
gold,
we need to
black
suffer
on black
for the Ponzi economics that we put ourselves through, delaying gratification for the for the next generation to suffer.
What do you think that target rate is?
Very quickly, just to clarify, the reason that gas prices are going down is that through November to now, oil prices universally have been shedding cost. They've been dropping, and the U.S. is actually increasing stockpiles of reserves.
I mean, I saw a chart this morning, and the chart this morning showed that there were, in fact, I'll post a chart. if I can find it now, and it shows that the reserves are at the lowest point that they've been in 40 years. I just want to double check that my chart.
Here, I'll tweet. I can show you, like, these are historically, this has been going on through, like, here's a Reuters article I just found not long ago, like just now to do this. Here, I'll add it to the list here, and it's another one that says, it's been the prices, crude oil prices have been dropping. And I've seen a bunch of different types of articles regarding the reason for that. Part of it is that, there's still this recession fear. The demand for oil has been declining, which I think is interesting because usually that's not the case as we head into winter. So I think that's, either,
let's do a little
some human behavior change has occurred that we will recognize more with a little bit of distance, or something else is happening here. There's a statement that people are no longer driving their gas guzzling cars in one of the articles I read. I don't know how universally true that is. It seems to be more a situation of the U.S. We are the ones that tend to have the non-fuel efficient cars, but there are apparently some behavior changes that have happened, and I guess COVID rearing its head again is another thing that's keeping people home. So the demand has dropped some. So the price drop, I guess, like in November, by the end of November, was like almost 3%, and then it's been dropping since then. And I haven't seen a statement that says that there's any policy that says that we are using our national reserves. That would make big news here, because that's just something that is very controversial about whether or not we should use reserves, if we're allowed to increase our reserves by finding new reserves and accessing those. So it's like a huge topic, and so that would be something that might actually supplant all of the FTX, Binance, Michigas. but I haven't seen that.
Would love, Ryan, if you have the article, it'd be good to pin it above. I think you did already.
I already pinned. I mean, look, this is one chart. I've got many more. Just the problem is I need to get my laptop to search for them.
No, all good.
But I mean, this one just shows where the blue line is, where the strategic oil reserves are as of a few days ago. And I mean, you can see exactly what's happened to the oil reserves.
Yeah, I read the same thing as well, but it was a while ago that Biden enacted a policy to allow for the strategic reserves to be used, but I haven't verified it. So anyone listening, you could verify it. But without going too much off topic, I want to go to the next point before we get into the Binance discussion, Binance and FTX and Kevin O'Leary, which is the bill by Senator Warren. I think Ryan, you also covered that in your show. You covered everything in your show today. But that was fast. Like, from what I understood, and I think Umbrella's with us. Maybe Umbrella, can you tell us before Alex plays the clips, what is the bill that Senator Warren is trying to get through? And before you do that, before anyone gets scared, Rand did make a point that Senator Warren's success rate in getting bills through is like 0.36% or something along those lines.
One out of 329. One out of she's lobbied for 312 or 329 bills, and she has managed to get one through. So
yeah, that one's gonna hold her through, though, right? It's gonna gives her strength and courage. that it was the consumer finance one, right? That's the thing that she hangs her hat on, and is just like, I'm gonna make this work.
So
been
Umbrella
for I think 10 years or 12 years.
But is that is it relatively common for a senator to have such a rate of success for introducing bills? Maybe that's the basic rate.
Not for so many. I think not for. It depends on the profile, right? So there's a lot of people in Congress, and they are not. They're not proposing. They're not part of. They're not very active, right? They're mostly people who are part of caucuses or things like that, but they're not actually promoting bills. But for somebody who's got a high profile and is known to both write and sponsor other bills, it is remarkably low. But for whatever reason, she's still incredibly popular. She keeps getting reelected. So we'll see how, what that is. But she's been moving away from both sides, really.
We'll go back. I don't want to divert too deep into that discussion about Senator Warren, but I just want to just very briefly umbrella, because my focus right now is the Binance situation, which I think is the most important. So within like a minute, I won't even play the clip. In about a minute or so, umbrella, what's that bill?
Well, effectively, she wants to ban crypto without banning crypto, because a lot of what she introduces technologically I see is practically impossible or not feasible to implement, or it's going to be so costly, it's going to put anyone that's either out of business or basically say, well, I'm not going to participate in this economy. Everything from, can you actually KYC custodial wallets? I think it's practically impossible to KYC custodial wallets. It's like and I compared it to Mario, when you sign up for Twitter, do you KYC? Imagine trying to KYC everyone who signed up for Twitter. It's the same sort of thing.
Yeah, but Umbrella, be careful there, because the MiCA, which is the European legislation, has components of that bill. So the MiCA legislation, for whoever cares about Europe, has a component of KYC on custodial wallets, and even applying AML to certain transactions, etc. So I'll push back on.
There's no doubt that KYC will end up in whatever bill is passed, period.
Absolutely.
Yeah, but when you're doing it in a decentralized world, when you're effectively trying to bring KYC or AML regulations in a world where it's basically, a technology, right? You're banning effectively, or you're prohibiting a technology happening. I'm not adverse to KYC AML, and I definitely think you should have it. And I think, my personal opinion is that as soon as you hit fiat on or off ramps, that's when your KYC AML should happen. I think once you're already in the, crypto economy, if you want the technology to be as, good as possible, I don't think we once we're in that, you shouldn't start having KYC AML checks. In that, I think from a custodial wallet perspective, it's mind-boggling that you would try implement something like that within it. And then I guess, secondly, I know, Mario, don't have a huge amount of time, is to try the reporting of transactions greater than $10,000. So that effectively means anyone doing any kind of DeFi transaction greater than $10,000 would need to report that, which I think is just ridiculous. Also, is a bit ridiculous and difficult to do.
Let me play devil's advocate here, and I think we should sober up as an industry. And I know it's an unpopular opinion.
It's better,
but let's take a very sober viewpoint and say, crypto gives people the ability to move multiple millions and maybe even billions of dollars in a span of seconds to anyone, anywhere in the world, right? That's why we're here. Why would governments currently allow that when they don't allow it in the traditional finance system? So why would governments allow people to move billions of dollars anywhere in the world to anyone that they want without to terrorist organizations, to drug dealers, to outside of countries with foreign exchange control, etc., without stopping that? Look, I know we live in the crypto world where we think that it's okay to do that, but just think of the traditional finance world. If you move $600 around, the IRS want to know about it. And here we are in crypto moving multiple millions, and even 18-year-olds and 19-year-olds and 20-year-olds are moving multiple millions and maybe even billions of dollars. And you expect government not to stop that? I mean, I think we need to wake up and just realize that it's almost inevitable.
No, yeah, I agree. But the reason why
bill is actually.
Sorry, Simon. Alexander, I just let Simon go because he's been trying to jump in for the last 5 minutes to speak. Go ahead, Simon.
No worries. Well, the reason why firstly, we know why they would want to stop it. But the only reason they wouldn't stop it, which goes back to the original Bitcoin mission, is because it's decentralized and it's impossible to stop. Would be the only reason. If they could have shut down Bitcoin, they had their opportunity. But now they'd have to, spend an incredible amount of money to perform a 51% attack and simultaneously.
They don't want to shut it down,
Simon.
They don't want to shut it down. They just want to know who's moving money to who and how much.
Yeah.
Like the finance system.
Yeah. So the control mechanism is you've got a very interesting compromise right now. So firstly, one of the things that was covered in the Congress and Senate hearing was the risk of all the data moving. So, for example, when China did their first ban, all of the data went over to Japan, South Korea, and Singapore. And then they realized that they had to reinstate the exchanges because if you control the on-ramps and off-ramps, then you get all the data, and everyone wants the data. It's a data game. Everyone wants the KYC data. Everyone wants the tax in their country. But the compromise with once you've onboarded, you've come on through KYC, and then you've taken your funds out, you then get the immutable record of your transaction. So obviously, they will, and they'll do everything they can to fight the privacy coins, the mixing, the tornado caches, and any of the tools that they can that could be an aid to obfuscating from the blockchain. And the only reason why they wouldn't do it is because any attempt to control it puts you in an anti-competitive environment. And you'd need to be in a position, and the only time when the US will do it is when they actually believe that their threat to being the empire is actually a threat. At the moment, they don't believe it is a threat. They think we've got the largest capital markets, we've got the best, all of the things that Kevin O'Leary was pitching why the US should embrace the industry. And so you can try, but if you end up creating an environment that's completely anti-competitive, that takes everyone over to the other countries, and then you genuinely believe that there's a threat to your position in the future, that's when you start looking at where's the compromise, and a good compromise is an immutable record on a blockchain of people's crime, so that at whatever stage law enforcement can actually use that in their favor.
For Warren's, there's a few things here. So first is Warren's bill is bipartisan. Why? Because it's literally what is coming from the international regulatory segment. This is something 200 countries are signatories on, including the US. And all it does is reflect the change that's coming. It is probably got more support because of FTX, but that's really all it is from what we can see just from news articles. Like, I don't have the bill.
Do you think, Alexandra, do you think it will go through?
I think it's likely because we're mandated to bring in these rules where ordinarily they're recommendations, but we have a mandate. And I have been talking about this for like a year, that since we've had this particular mandate coming in. And that's the first thing is the law is changing, and we can talk about how it's changing and why. And one of the reasons why I don't know why the presidential working group isn't the one that's basically bringing all of this in and saying, here's our regulatory structure. But so now we have finally Congress is coming in and saying, here's our structure. And they're literally implementing the same base structure that we're going to all have to implement in the future. So I do see it probably passing. But once again, this is why the crypto community needs to have a bill draft, right, to go up against this, because some of the things that are mandated are not possible with blockchain technology. That's the second thing. People are arguing the wrong thing. What they're arguing is should I comply? Because first of all, it's a very regulated space. It's not unregulated. But people argue, should I comply? But the question really is, if I comply, how do I do that? Because there are not actually elements in place that allow crypto companies to comply with many of these regulations. It's literally not possible. So people have been arguing the wrong things. The other thing is that New York just passed a law.
I'll go, Alexander, just because we've got a lot of speakers, and I want to move on to the Binance.
New York just passed. It's breaking news. New York just passed a law regarding banks who want to involve themselves in crypto, even if it's third party. And then there's a new
what's
thing
that law?
So
hold on. I mean, sorry. What's that? It's just too many points at the same time. So what's that law that New York just passed?
I just don't know when I'm going to talk again, so I just want to make sure that I get
all good. So what's the? Yeah, no, but so I'm trying to keep that segment in 2 minutes only, so I can move on to the Binance discussion. But you did mention there's breaking news that New York just passed a law. Is it a major law? How does it impact crypto?
Let's
very briefly
blow it up.
Oh, you're muted, Alexander. So what's that law that was? Yeah, go ahead.
So it's a law that just passed that says you have to ask for permission before you have any crypto activity at all, not specified what. You have to ask 90 days advance notice is what you have to do if you are a bank or regulated like a bank in New York. So that is actually not insignificant. That's a pretty big thing.
I appreciate you sharing it. Any other breaking news, guys, you're welcome to unmute and share them, but we do have a team that's checking the news. So if there is anything breaking as well, they will send it to me. I want to move on. I know there's a lot we can talk about. I mean, I have to move. I want to move on, please, because even Amin wants to speak and he didn't get a chance to even speak. I mean, I'm sorry, bro, but I want to really discuss the Binance. That's the main story. Like I was hoping to get to it in like 10 minutes, and it's already been like 45 minutes. Alex, I'm going to give it to Ran, if you don't mind. Ran, you've covered the story more than anyone. Scott, I think you've covered it as well on your show. I'd love to get your thoughts, guys, and then we'll go to other panelists. I know Fidgetal has his hand up. And I know that Cat Skill was critical about Binance since the early days. Would love to get an overview, Ran, before Alex plays a few clips. I'll have Ran give us an overview. What's going on? Why is this major for anyone outside of crypto? Why is this major for the space? What's happening? Why is Kevin protecting FTX? What's the latest? And then Alex, I'll let you play the clips, and I'll get Wolf of Wall Street's get Scott's opinion on this as well. Go ahead, Ran.
So look, Kevin O'Leary's been a regular on my show. The first interview that he did after the FTX collapse was on my show, and on that interview, he was very, very much pro SBF.
About to post
the point
you.
Where he even said, I asked him a question. I said, if SBF came back to you now after the FTX collapse, would you invest in him again? And he said, great question. I think I would invest in him again.
Sub 6.
And that was the beginning of a Kevin O'Leary narrative of support, unwavering, complete support for SBF as things were unraveling. And as things were unraveling and becoming worse and worse, Kevin O'Leary's support for Sam Bankman-Fried grew more and more like loyal. And then it came out that
100K volume.
What happened was he was paid $15 million to be an FTX spokesperson. And if you look at how he broke up the $15 million, he paid the taxes, which I think he said were $3 million. And the rest, he had FTT tokens and FTX equity. So kind of like he got $15 million, paid the tax on it, and then the balance that remained, he bought FTT and FTX. So he has a legal obligation, because that's what he signed, to be a positive spokesperson to FTX, because that's what he signed. He got paid $15 million. Now, if he breaches that, he could be on the line for $15 million. The only thing is that the $15 million that he got, he's already paid his tax, and the rest went to zero because FTT went to zero and FTX went to zero. So that is one theory as to why Kevin O'Leary is still so much pro FTX, to the point where, to be honest, I think it's become a little bit embarrassing. I think
embarrassing.
He questioning
he loves FTX so much.
Is so loyal to
that it's
SBF
embarrassing
and to FTX, even after everything.
But Rand, can't he breach the agreement, because the equity he got is worthless, not worthless, but almost worthless. The FTT token. No, you said that he paid tax, and then the rest of it was an FTT tokens and equity. No.
So if I give you $15 million, and then you use the $15 million to buy my token and my equity.
He used the money to buy equity in FTX and buy the token?
Yes, and pay tax.
Holy shit!
Can I jump in on that?
Is this confirmed or is this
confirmed.
what he says?
He confirmed it in the hearing.
Kevin O'Leary is protecting his ass because that is shady as shit. It was probably him that set the valuation of FTX. I would love to understand a bit more in an investigation to whether he was the first investor that set the valuation for everybody else. But SBF essentially said, you know, I'll give you the money, you reinvest it back to me.
Correct.
He's the spokesperson. He did it with the FTT tokens. He did it with equity. Kevin O'Leary is doing nothing but protecting his own ass and his own reputation. It's shameful. He should not be a part of our industry anymore. I'm not saying that there's anything criminal or anything like that.
Up?
I'm not saying that he knew any of that stuff. But he certainly should not be allowed to come into our industry after calling it a scam and then getting involved in SBF because the money was worth it. And then coming along and doing a bloody Mark Capellas where he started trying to, you know, blame the crash of the exchange on Bitcoin, but this time backing SBF to cover his own ass because he's involved in all sorts of stuff that could be really, really detrimental to him. And so instead, he's doing an SBF. He's playing the SBF playbook, which is, I thought it was all okay. I thought it was just Binance that came along and did it. It's shameful. It's embarrassing for our industry. And I don't think that, you know, there's anything, I mean, I've got no idea. I don't think there's anything criminal there, but he certainly should not. He should be someone.
Can I actually, let me rant on that. I'm going to play the clip, by the way, just to give people the context of what he said about Binance. And then, Rand, would love to hear your thoughts on what he was trying to get at here.
Why do you believe FTX failed? I have an opinion. I don't have the records. Here it is. These two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now.
Thoughts?
So that's not the
That's not the clip.
That's not the important.
That's a clip about Binance.
What else did he get besides 15 million? He got 50. Sorry, I think I missed how that transaction happened. He got 15 million and reinvested it, but he must have gotten something else, right? Because I mean, that doesn't seem like that's enough for him to kind of go along with this. Am I not understanding how this?
15 million is a lot of money.
It's a lot.
But he's worth like billions. I thought.
No. First of all, he's not worth billions.
He allegedly 400 million or so.
Yeah. Second of all, just hold on a second. If I give you $15 million and I say to you, you got to be a spokesperson for my brand, and you reinvest the $15 million into my brand, but then my brand collapses and your investment goes down to zero, and you breach your contract with me, I could still hold you liable for the $15 million, even though you reinvested it. It makes no difference. You still owe me $15 million if you breach the contract. But again, this is not the important part. Okay. The important part of the discussion revolves around two things. The first thing is, he alleges that the reason why FTX began to go insolvent, or the reason why FTX began to use customer funds, was because they had to buy out Binance. Now, you'll remember that Binance was FTX's first investor. At some point, Binance wanted to exit. It was about a year and a half ago. Binance wanted to exit. They exited their stake for a sum of $2 billion or $3 billion, somewhere around there. They got a combination of cash, BNB, BUSD, and FTT tokens. Okay, so they were bought out for a combination of, again, I'm going to say it, cash, BUSD, BNB, and FTT tokens. So now the question becomes, where did Sam Bankman-Fried get $2 billion or $3 billion or whatever the number was to buy out CZ?
Let's go.
So this is Kevin O'Leary's theory. The theory is that, or what he's, or let's not say theory. This is the narrative that he's trying to create. The narrative that he's trying to create
Throw us
is
a
that
subscribe if you haven't already.
Binance was
Putting out
a big shareholder in
content
FTX. They
all
own
week,
20%
all
of
month.
FTX. And that for as long as
Appreciate
Binance owned
you.
20% of FTX could not get licenses.
Gonna spin the rep wheel later
people
tonight.
said, look, we don't like the fact that Binance is on the cap table. And so Kevin O'Leary is trying to spin a narrative
I'll
that
put you
says,
on the rep
if Binance
wheel
is on
right
the cap
now.
table, it's impossible to get licenses. Therefore, the only way to become a real licensed player is to get Binance off the cap table. How do you get Binance off the cap table? Well, you need $2 billion. Some of it you can pay in creating your own token called FTT. Just give Binance some FTT. But Binance is smart on that. They don't only want FTT. They also want $1.5 or $2 billion in cash, which is a combination of BUSD, Binance, etc. And so this is where narrative that Kevin O'Leary is
Tune
creating
back in later.
That's because Sam Bankman-Fried
We're spinning this
was
wheel.
forced to buy out Binance.
The 6 was here.
Because that's the only way that Sam Bankman-Fried could get licenses. That is the first time that he dug into customer funds. And he's saying, look, the beginning of this.
We'll get some names on here. We're giving away some rep.
Started to use customer funds to buy out
Let's
PZ
go.
so that he could get licensed. That is the picture that he's playing. And if you listen to the end of his testimony, at the end of his testimony, he says, or at the end of the interview with CNBC, he says, I don't think that after all the testimony that everybody's heard here, that Binance is going to get any further licenses. So you can see he's almost trying to, again, even at this point in the game, take a stab against Binance.
But
so
how do you
I
go a layer
have
deeper?
I have firsthand
Go a
knowledge.
layer deeper.
I have
The
firsthand
layer
knowledge
deeper.
of this. Hey,
I'll
Simon,
give
hang on.
the
I have
Scott. Go
firsthand
ahead.
knowledge of this that ADGM would not give anybody a license. ADGM, Abu Dhabi, would not give anybody a license that was associated with Binance. Kevin O'Leary, and I'm not defending him at all, but what I'm trying to tell you is what he's saying is factually correct. And I'm not defending him at all. And I actually looked into starting 2 different exchanges and met with ADGM, had these conversations with them. I also met with the party that got a license. This is one of the royal family groups that did get a license at ADGM and did partner with Binance and did not move through with it. And so all that stuff that he is saying might be specific to.
But my question is, I want and then I'll go to Scott afterwards. But my question is, like, what is Kevin saying that? I know he's taking too many jabs at Binance, and I know he's being less critical than others, or not even critical about FTX. But is he saying anything that's? By the way, ran your. If you can mute, that'll be good. But is he saying anything that's factually incorrect? Maybe Scott, and then Simon, and then Fidgetal.
I doubt he's stupid enough to say anything that's factually incorrect. Also, I think I give him a lot less credit than the rest of you may be giving him for the conspiracy theories and for him having this grand plan. To be quite frank, I mean, I've spoken with Kevin quite a few times, and I've liked him, but I think that he has a huge ego. This is some form of Stockholm syndrome and cognitive dissonance, right? I think that
100K spaces.
His ego is so inextricably tied to his decision to go so big with FTX and with SBF that he's probably having trouble letting that go. I'm not a psychologist, but in my conversations with him, that seems to be more the case. But more importantly, if you listen to the Senate hearing and his comments on what happened and the fact that it was regarded to Binance, he was very, very careful to say that these were the facts based on what SBF told him and his conversations with SBF. He didn't really promote his own narrative to any degree. He continued to say, I called SBF. This is what he told me. I called him again the next day. This is what he told me. So he was very careful to say, listen, this is my understanding directly from SBF, knowing that everybody else assumes SBF is a liar, right? Nobody's buying into any of SBF's stories. And also, I mean, if you read through, obviously, the SEC allegations and the charges against SBF, we all know that FTX was funneling funds to Alameda customer funds from the very beginning, long before Binance. So it's a nonsensical narrative. It's a stupid story. And I think Kevin, frankly, is just deflecting. I'm actually surprised that he's not pleading the fifth, saying I have no knowledge of this and just stepping back out of the spotlight. The very fact that he's going and doing interviews and admitting these things and sitting in front of Senate, I think is just a testament to his massive ego.
But you don't think that it doesn't he legally have to protect? No, but then Kevin, Ryan, I want to
I don't think so. I don't know about that.
One point.
Yeah,
I agree with Scott. One point is that he may or may not be legally obligated to protect FTX.
Yeah. And
I
can't speak on that, but I can't imagine that a company that's gone insolvent, he couldn't just, say nothing. I don't understand why he couldn't just say nothing.
The baseball player, I forgot his name.
Tom Brady.
he's not saying.
Yeah, I was going to say Tom Brady, Larry David, Shaq,
Football.
Steph Curry. You don't hear any of that. You don't hear any of them testifying in front of Senate. I think Kevin O'Leary literally has such a big ego that he was like, "They're inviting me to the Senate. I'm going to go speak."
But he can't be compelled. Isn't he a Canadian citizen?
He is.
No one is compelled.
He's not being compelled. He's doing it of his own volition because he has the opportunity to sit in front of the Senate and be on TV. That's honestly my opinion.
No,
you can't be compelled to defend a fraud. Like once it's a fraud,
that's correct. It's a fraud. He's not. I don't think he's a legal risk if he does not defend FTX.
Yeah, you're not going to get sued by a company in bankruptcy that's committed fraud. Ain't going to happen. So that's not something that can even possibly happen.
No.
He is doing the SBF playbook. The SBF playbook is plead ignorance. So everything that he said is true. If you don't know the ultimate beneficial owners, and if your UBO is Binance and you're trying to get a bank account and you're trying to get a license, then they're going to ask you for who is the ultimate beneficial owner of Binance, and Binance probably doesn't provide the necessary KYC for you to grow comfort on you actually knowing where this money goes to. That's probably all true. But what all he is doing the SBF playbook, which is stating on the public record that I was duped by SBF. I'm still duped by SBF. I didn't know anything that was going on. And once you've got that on the record, then whatever comes next, you can defend yourself against, and you get all the national TV, and you get to go back to business as usual. And continue to sell your services to attach your celebrity endorsement to different services and protect your reputation.
But why is he attacking Binance? And I just don't see the logic there. Like, just shut up.
He's got to take the story, right?
I think he's deflecting. Yeah, I think he's deflecting blame from himself. It's the easiest explanation.
So hold on. Just listen to this. Let me play something for you guys. 1 second. Give me one.
What's up?
$2 billion. Whenever Sam Bankman-Fried
Appreciate you, Six. Appreciate you. I'm gonna get more people out later tonight.
But if you think after what happened today on the U.S. Senate floor,
I'm gonna be giving away more stuff later tonight. We'll do the wheel. We'll get everybody out here. Appreciate you. Let's see.
There we go. I mean, he's saying
what's a good time?
Indirectly saying
for the spaces
that his agenda was to make it almost impossible for Binance to get licensing anywhere on earth.
Absolutely, Ran. To your point, man, the point that he is attacking in any one of us that seek the license before, I think, Simon, you will understand this very well, and any other person that seeks the license, he knows that in order for Binance to have received the licenses they have received so far, they must have found a way to not disclose exactly what he can prove that is the truth. And that is a very dangerous thing for Binance, because if he builds global awareness that the disclosures that were required for Binance to get the licenses they got so far were untrue or misleading, he can win this at a global scale. And that's exactly
I don't sorry. So which disclosures are you referring to? What's the concern?
The ownership structure. At a certain point after 2017, every single regulator that you applied to asked you about the ICO, asked you who owns the business, asked you about a bunch of other things that if you have said to any regulator around the world that, yes, I have made an ICO, and yes, these are the guys that invested, and yes, we have not done proper KYC to everyone, and yes, we had issues with the Chinese as we were kicked out of Japan. you understand what I'm saying?
So what you're saying is that Binance didn't do full disclosures when applying for the licenses.
No, I'm saying that Binance, like all other guys that did ICOs and went to seek licenses, went to advisors, and these advisors found a way in order to make sufficient disclosures that made them get the license. And what O'Leary is trying to push as a narrative is to coordinate globally around the globe all the regulators that actually looked at the Binance filings, and he's trying to push a narrative towards there. And that narrative is he's seeking with it to get licenses revoked for Binance. And he knows that that's...
But why? What's the point of this? Like, he just fucked up with FTX, just walk away.
I don't know what his motives are, but what I'm saying from a strategy perspective and from anyone around this table that have sought the license before and have been through the 2017 ICOs, etc., knows that a lot of people had issues with that. And if he's pointing out to a point saying that, look, every time SBF was trying to get a license, people took issue with Binance being in the cap table, he's basically indirectly saying globally to licensing organizations, look at the files that were submitted to you. Because did you do the proper investigations? Did you see actually the proper who owns what and how capital was formed? He's stressing on follow the money. He wants to go all the way back to the use of funds, the proceeds of the ICO. He wants to go as far as possible. I don't know what his motives are, but this is the strategy he's seeking, and it's obvious to anyone that seeks the license before.
So there's two things though on that. The first is that so new regulations are coming pretty much globally, like in all the jurisdictions that crypto primarily operates in, and they do have a second bite at the apple. So if there's some statement saying, you know, Binance is or any other exchange or whatever has improper documents, they're all going to have to register in a different manner at this point. So they're all going through the process again, and they'll have another shot instead of reviewing old filings. They'll have to issue new filings, and They'll be able to look back through it then. The other thing is that I pinned at the top this Decrypt article that is what happened at the time of the buyout, and this is what CZ and SBF both said about that buyout. Tonight. So there was a $900 million raise by a bunch of VCs, which is a whole other discussion about how that happened. They changed the valuation in less than 12 months from 1 billion to 18 billion. That is insane, right? But that's part of what happened is there was a valuation attribution that was done primarily by these VCs, not by CZ, right? And he did say Binance at the time, the same thing Amin is saying, which is Binance is not going to get through regulators. And CZ came back and said, we're probably one of the most compliant systems out there. We're very heavy on regulators and regulation and et cetera, et cetera. But that statement has actually been brought up before.
See, okay, this is you've got two options in Kevin's situation. Yeah, there's only two. You were either duped or you were involved.
Let's go.
Being involved is not what you want. So the only option you have left is you were duped. Now, either you genuinely were duped, or you need to come across as duped. That's the question that we don't really know. But to ignore everything that's presented in front of you is either you're continuing the narrative that you're duped, and that's what I think is fairly suspicious. Now, the whole thing about what he's actually trying to do to Binance, I don't think he's trying to do anything to Binance. Remember how he talked about Celsius in his video? He was like, collateral damage, thank you very much, piss off, now we can build a better exchange or something like that. This is literally, it's just him protecting his ass, and whoever needs to be collateral damage is that he's saying, here's a reasonable story of why SBF stole client money. And it wasn't because he wanted to steal client money. And this seems like a reasonable story to me, so I'll use regulations as a reasonable story. Because if I got duped based upon really dumb information, let me try the most plausible story of why I got duped, and then that's all I need to put out there, because being duped is the better story than being involved and being complicit. And
but Simon, do you remember the story that Hussein? I'm trying to bring up. I think he fell asleep. I'm trying to bring him up about the liquidity pool being created by Kevin.
Let's go.
FTX that was being created between Kevin's exchanges, FTX, and Justin Sun's Wobby. Doesn't that show a certain?
I don't go that far. To me,
but doesn't that show? The reason I'm bringing it up is that Hussein and everything they've shared, including the block, the money that FTX paid the block, time and time again, it's proven to be accurate, and they've given us a whole data room. So I'm gonna take it more seriously now. Doesn't that show a certain level of involvement? Not criminal involvement, but I'm saying more things behind the scenes that he was doing with Sam.
Knowledge, not involvement, probably knowledge.
Yeah, so that examination will happen, but this is deflecting an examination into that onto Binance, and that's what this is just the best strategy you can come up with.
Is attack, absolutely.
It's just deflection. That's what it is. Now, the whole story of the whole you need to know your UBOs. That's always been the case. That's not new regulations. If you're registered with FinCEN or any type of regulator in the world, anti-money laundering laws has been around since 9/11 everywhere. So that's not new regulations. And if you've got that wrong, you would have had to go through a remediation. And the reality is that you need to know who your customers are, who the ultimate beneficiaries are, what are the source of funds, and what are the source of wealth for everybody. Binance isn't doing any of that. There's going to be a massive remediation. They'll do that to a certain level, but you're meant to be doing that on everyone. And then every time you see something suspicious, you're meant to file a suspicious activity report. That's the rules and regulations everywhere.
And for the audience, as you see Simon, and then I'm going to give the mic to Fidgetal right after Simon, is that the discussion is heading slowly more towards Binance, which will be the focus of this.
I'm just seeing some breaking news on crypto Twitter is banks are currently closing people's accounts that had wire transfers in from FTX. So I think people should realize if you did, you might want to take action because your bank could potentially close your account.
I want to highlight one thing.
Fidgetal, maybe that's something you can. Yeah, I was going to give you the mic to comment on this before you do, and I appreciate you sharing this, Umbrella. Umbrella, do you wanna? So can you send me the source, Umbrella, if you don't mind, via WhatsApp? And Hussein will join us in a bit. He's in a conference. He's the one that could tell us more about Kevin O'Leary's involvement. So Hussein is probably the biggest whistleblower we've had in the whole FTX saga. So it'd be good to have him give us his thoughts on this. Before that, anyone that was involved that works at Binance or worked at FTX or Kevin, we know everything about Kevin, but if anyone's involved in those two exchanges, do hit us up and we can keep your identity anonymous. You can either share with us information, the team will share with me, or we can bring you up on stage using an anonymous account, as we've done multiple times. Fidgetal, would love your thoughts on what was discussed so far, including Umbrella's breaking news just now. You're muted, Fidgetal. All right, Fidgetal.
I'm going to close it out, guys. Hit up the spaces later.
I'll
please do, man.
Yeah, so a couple things. I just wanted to touch on the rates discussion, just one quick sense on that. So yield curve has been inverted 2 years over 10, 22 or 26, 28 times since 1900, 22 times, which is about 80%. That's led to a recession. And when the spreads reach 70 basis points, I think it's either 90% or 100% chance of recession. So, I mean, you're looking at 80 to 100% chance of
I don't know how long this is going to last.
So,
it's been,
looking into next year, I mean, I think there's more difficulty ahead. Rand talked about, some of the things slowing down. That's all true, but it hasn't
have more content dropping very soon.
The S&P 500 only
very soon, and we're going live again
in the U.S. Our public
and we're doing
25% of the jobs.
6 p.m.
And the
Eastern.
small businesses have been really reluctant to lay off